Gold prices are on the move again, and the next few weeks could be volatile. From US inflation data to the Trump-Putin summit in Alaska, plus record demand from central banks, there's a lot in play, so let's get into it. This week, gold is down roughly 1.5% overall. Why? Because stronger than expected US inflation data and low jobless claims, as well as a strong PPI index, has made traders doubt whether the Federal Reserve will deliver a big rate cut. And when rates stay high, gold can lose some of its appeal in the short term because yield-paying assets become more attractive. The big geopolitical story is the Trump-Putin meeting in Alaska, which is about to take place. As discussed in my previous video, if we get a credible path to a Ukraine ceasefire, markets might shift to a risk-on mode, which could soften gold prices. But if talks stall or tensions rise, gold typically sees a quick jump as investors look for safety. But remember, this is speculative and this is not financial advice. Longer term, gold's foundation looks strong. Central banks bought 166 tons in the last quarter, which is well above the decade average. ETFs added 170 tons, a big reversal from earlier outflows. So together, these flows are keeping a strong floor underneath the current prices, even during pullbacks. In India, prices dipped from a recent high. That pullback triggered fresh buying, especially with festivals like Dussehra and Diwali coming up. These are times when gold demand traditionally does spike. Other factors in play are recent tariff drama. Trump briefly announced tariffs on Swiss gold bars, sending prices to record highs before reversing course. Shows how headlines can swing the market in hours, so I recommend subscribing to this channel to keep up to date with future gold news. China's push for gold is part of a longer-term strategy to diversify away from the US dollar. Gold's short-term moves will depend heavily on the outcome of the Alaska summit, the US economic data, and the Fed rate decisions, and any surprise trade or sanctions headlines. Underneath all that, record demand from central banks and ETFs are keeping gold well supported. So in other words, the dips may be temporary, they may be shallow, but the ride will still be volatile. Underneath all that, record demand from central banks and ETFs are keeping gold well supported.